As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, providing tools like BloodHound and Blackbird that help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and this webinar is part of that mission. Chris Knox has been trading since 2003 when he retired as a police officer. He started ZoneTraderPro because he was paying for software that didn't work as advertised. We all know that feeling. He has continued to add tools to his software suite since then. In 2018, he added real-time order flow analysis. And in 2019, ZoneTraderPro added the ability to analyze and classify large lots and other orders. So as always happy to have Chris here. Chris, go ahead and start sharing your screen and we can get started.
Okay, great. And I want to thank Keith and Shark Indicators for the opportunity to make this presentation today. And I really hope that you can learn something from this, because over the last basically over the last year, I've been doing a lot of research and developed my volume analysis and have been using BloodHound to basically create a system that is going to be trading with the trend by using the VIX. And that's what this is all about here today. First off, our risk disclosure. Of course, futures and forex trading contains substantial risks and is not for every investor. An investor could potentially lose all or more than their initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Risk capital should only be used for trading, and those with sufficient capital should consider trading. And then past performance is not necessarily indicative of future results. So like Keith has said, I did create this because I went to a seminar on a Saturday, plunked down $3,000 for some piece of junk software, and about $30,000 later, I decided to go and create ZoneTrader Pro. And besides, and I've continued to add to it. After adding the order flow suite, I've done things with the cumulative delta divergences, divergences that show accumulation distribution, and I've also done a lot towards volume analysis. And that's really what ZoneTrader Pro is. It's a combination of basically 4 different things, which is the price patterns, order flow, divergence, and divergence patterns, and volume analysis. What I want to talk today about, though, is the VIX. And from Wikipedia, the VIX is the ticker symbol from the CBOE index, and it's basically it's the stock market's expectation of volatility on the S&P 500. It's calculated and sent out in real time, and it's very easy for us to get that in our NinjaTrader. And it's commonly referred to as the fear index. And basically, as the number gets higher, you're going to see the S&P selling off. And when the number gets lower, you're basically going to see the S&P going higher. And with that in mind, I basically went and developed VIX BloodHound templates that I combine with my divergence indicator to develop my trades. So why do we want to trade? Why is the VIX so important? Why do we want to trade with it? Well, the main reason and what got me interested in it was a website called Spot Gamma. And if you had to summarize what Spot Gamma is about, it is about figuring out that when options are traded, the options dealers want to have no directional bias one way or another. They don't want to be positive, or they don't want to be bearish, or they don't want to be bullish. And in order to do that, they need to buy and sell futures. And they basically have to hedge out the calls and the puts that they are selling so that they do remain in options terms what is called delta neutral. The website that explains all that the best, and he has a YouTube channel, also is, like I said, Spot Gamma. I am a paid subscriber to Spot Gamma. I don't earn any referral fees. So, they're full disclosure, I'm not making anything by telling you guys about what Spot Gamma does. I just use his product. And after I understood what he was basically saying, with this information about options and hedging, that's what led me to create the BloodHound template, my templates based on the VIX in ZoneTrader Pro. So this is from just 2 days ago. And what we're seeing on the chart on the left is Bookmap, and a chart on the right is ZoneTrader Pro. And what I'm highlighting here is ZoneTrader Pro picked up a very large lot trade, because I can go back and I have an indicator called Delta Strength. Delta Strength can go back and reconstruct the tape to show you the size of a particular trade. And that's what you're seeing, the negative 2021 coming across the tape. If you only saw that in the time and sales window in NinjaTrader, it would be broken up into all the individual fills, and you wouldn't be able to see 2021. Over here on the left in Bookmap, you can actually see that trade going off, and he has basically a cumulative indicator, which is the cumulative amount of hedging at any one time. But as that 2000 lot went off, his indicator, called the hero indicator, picked up that trade right there. And the market ended up trading down another like 5 or 6 points after that. So that's basically the idea. Is you can see with the hero indicator how much options are being hedged at any one time. This is what my trading chart looked like at the time with the VIX template. And the VIX template was already saying to take a short trade. And then where you see the blue arrow, that is the actual trade itself. Now this chart is only a 300 tick chart, and that's why you're seeing it broken up and not seeing 2000 like the other one. This was basically also quickly followed by a VIX buy signal and an accumulation divergence signal down here. Basically, these contracts, they were absorbed. ZoneTrader Pro realized that, gave an accumulation divergence, and you can see right just probably about 10 bars later, the VIX was green again, and that trade was good for about 8.5 points. And the purpose of this template is not to call a top or a bottom. I want to be perfectly clear about that. We're not going to try to do that. Sometimes it will do that, but what it's trying to tell you is the trend. In this chart, we start with an accumulation divergence buy signal back here, basically right after the open, and the template quickly goes green. The template is then advising against taking this short trade from here, and that short trade was from apex to from the high to the low was only 4 points. So basically, if you would have gotten in it, you would have gotten in it way too late. And then you would have been trading into an accumulation buy signal. And that is something that is just really kind of important to understand with these divergence signals. You're getting them at real time. Basically, where you see the arrow at in this trade right here, that's when we got the signal. And I'm going to explain a little bit more about where these signals develop and just in a little bit. But basically right here, if you had taken the short, you were being given a real-time signal, hey, I need to get out of this. If you did enter the long trade after the VIX turned green, that was good for something like 17.5 points from the low. The blue lines that we see right here are ZoneTraderPro's divergence signal going non-divergent. And that's probably a bigger and better use of the indicator, because this indicator is telling us, look, we don't want to, we don't want to be short anywhere in here. And if we had gotten short and traded against our signal, then you could see that obviously what was going to happen, it would not have been good. Basically, the VIX template kept us out of making a bad decision. Then here we have another accumulation buy signal, and probably like a point off the low, we were given a green VIX template signal to go long, and just basically, again, right off the lows. Now, the other thing that I'm doing is I want to not only look for divergence, but I also want to analyze volume. And what you're seeing on this is the SPY chart, the tracking chart for the S&P 500 with the ZoneTraderPro divergence indicator and the BloodHound template looking at the VIX. The SPY is basically used as a proxy. And I'm going to show, my next chart is going to be the ES chart itself with these arrows in exactly the same place. And the SPY, it's basically used as a proxy because we see these reliable divergence signals. We see more of them on the SPY than we do on the ES. And that's kind of the reason that we're doing them. And there are some rules here to using these divergences, but the main rule that I want to get across is I'm not interested at all in this part of the divergence pattern, which is just a standard divergence. This is also a standard divergence right here. I'm not interested in those anymore. When I created the indicator, that's what I thought I was creating the indicator for. But when I got the indicator, I actually had 3 types of divergences. And the first, the first type obviously is regular divergence, which I'm basically telling you right now, I don't even look to trade. The second is what I call special divergence. So special divergence is when we go from a high to a low, and instead of having a negative delta, the delta is actually positive. And if we look down right here, this thing that says KP2, the delta was positive by 223,000 shares in the SPY. And what that, when you do the math, this sell-off was $1.02 on the SPY. When you divide that up, you get 2,195 shares of a positive delta as this was selling off. And that is basically what is important about this volume analysis that we're going to do. Up here, where we did see our positive delta as price rose, they bought 128,000 shares, and we were given our distribution divergence. We again, they were basically distributing them at a rate of 1,534 shares per penny. That's how we read this. This is a heavier number right here, 2,500. We get, that number gave us almost a 10-point ES trade. 3,500 here, and so on and so forth. It's just a very interesting way to see volume and being able to analyze volume. Now, there's basically 4 trades here, and let me explain those trades. And then these are the trades that I would have considered, not just, because you don't see an arrow everywhere here. These are the trades that I would have considered taking, okay? The first trade was the long special divergence trade from right here. And the second would have been this distribution divergence from here. The third, now this is how the indicator works. And right here, we would have likely gotten our indicator telling us that there was positive divergence at this point. However, BloodHound is giving us our red signal all the way through here. So here would basically have been the first opportunity that if you're going to buy, you would have gone long. And basically then at the same, basically about where you had bought it, BloodHound goes red and telling you, hey, maybe you should think about washing this trade. It basically stays red and gives you the opportunity to re-enter here. And re-entering here basically gave us about a 5.5-point trade. Now, I don't have a trade indication here because by the time the VIX had rolled far enough to give us our BloodHound signal, we were already here. And that, to me, was probably too far off of the signal. Our next signal, again, special divergence. We get it basically on our lows down here. That trade, good for almost a little over 9 points. And then we have another distribution trade. When you see this number right here of 4,000, what I want to do is I want to compare this relative to the other numbers. So as we see our first number here of 1,500, our second number here of 2,500, our third number here of 3,500, our fourth number here of 4,000. Well, what's that telling you? Each time price rises, it's being met with limit order resistance, and it's being met with increasing limit order resistance. Now, that to me is what is really interesting. Only here, this special divergence trade from here with the 2195 represented our strongest accumulation of shares from here. But when you look at the others, you had 600, you had 1,000, you had 865. So that's basically the volume analysis part of this. The other part that is really important to understand, though, is let's say we had gotten on from here. Well, we're getting a real-time sell signal as we get up to here with this divergence distribution. And that is an extremely valuable signal, because if you have not already taken profits, you're being given real-time information. Uh-oh, do I get out of this trade? Same thing with right here. Normally, I like to get about 5 points out of a trade, and I've already got it. here by the time that this signal comes up. But if you stayed long because the template kept you long, well, you are being given a warning, and you, again, with the volume analysis up here, saying that, you know, this trade potential is pretty limited. So only with ZoneTrader Pro do you get this real-time signal and as an exit to take profit and get out of that trade. Here is the ES chart with the same VIX template. Basically, I've put the arrows in exactly the same place with, you know, looking at what you would have looked at on the ES. When I am trading, I basically have this as my right-hand screen and the SPY right next to it. And those are my two main trading screens. And the other thing that would have been interesting, again, is we note that right here, this was an accumulation divergence buy signal that ends up busting, but the VIX keeps us out of making that trade. Again, not making a bad trade is just as good as making a winning trade. It's a combination of both. Now, on the website, on my website, I have a web page under the trading strategy called Real-Time VIX Templates. And if you come to that page, you can actually see how I'm combining the VIX with the signals to give different versions of this template. The other thing that I would draw your attention to is I don't actually live in Florida anymore. I live in Punta Cana in the Dominican Republic. And kind of as a special offer for anybody that would be interested, I'm offering a vacation in my Airbnb condo here on the beach in Punta Cana. You should check out the blog for all the details, but basically, if you want to take a little vacation, chat it up, look to see what I'm doing, that's basically why I'm offering this, to basically give you time and training on what it is that I do. And the training is also a very important part of this, because there's basically 4 pieces to my software. And those 4 pieces to my software, what I do is I take you through each individual piece so that you understand that before moving to the next piece. So again, we have price patterns, we have order flow. I didn't even touch on this in this video because I wanted to talk about the VIX. I am gonna, as soon as I go through the conclusions here, I'm gonna take you to the real-time live chart from today so you can see what it looks like. But, you know, you got to understand that options dealers, they need to hedge their trades, and they're using the ES and the NQ futures to do that. The VIX, this is the fear gauge, which is normally falling in bullish moves and rising in bearish moves. I'm going to show you some of that. Only ZoneTrader Pro teaches you how to avoid these high-risk trading situations with these indicators by trading with the trend and by trading with the VIX. We develop our divergences on our SPY chart, and these make excellent trading opportunities when we combine them with the VIX. Only ZoneTrader Pro is going to show you real-time information, which is the volume analysis and the divergences. And it's basically why you need ZoneTrader Pro to effectively trade, because what we're doing is we're using real-time information. And we're not using MACDs, stochastics, anything like that. I don't care about stuff like that. I want to see real-time information that is actually moving the market. ZoneTrader Pro also has divergence and accumulation and distribution indicators to add to this toolkit. And with that divergence indicator, that's how we go and we perform the volume analysis. So I'm going to click the PowerPoint off right here and bring us to our basically our live chart. And we didn't really see that much trading today. This is a 300 tick chart. And on the 300 tick chart, when we could put everything basically in one chart, there wasn't really much going on. But we did have some breaking news here. And with that breaking news at about 12:45, you saw how the indicator up to that point was long, got you long, and it was actually long to the point where you should have been taking profits, and that's all explained in my price patterns. The indicator then goes short. We trade into a typical trend trade short pattern with the indicator again telling you to go short, good for another 5 points. We trade into another distribution short signal from there. Again, that was good for 8 points. It just makes a whole lot of sense to be using the combination of both the VIX and the divergences at the same time. There we go. As you can see, if you continue to try to short after the VIX had turned at this point, you're just making the wrong trade. What this looks like on the spider chart was this. So today, again, what I would be looking for, this is what I call a counter trend trade. I'm looking for this high number right here of distribution. This is right as the news was breaking. Again, trading into, it's basically the same pattern that we had on our ES chart. Here's our distribution divergence. We get short basically within a point of the high right here. We're going to ignore our long signal right here. Nothing to see there. We have a distribution short trade, again, good for 5.5 points. We have another distribution short trade there, good for about 4 points. Now, again, the way this indicator works is everything is working off of a zigzag. And when the zig zags, that's when the indicator begins to look to see if there is divergence. So if we were looking back here and we were getting a signal back in here, as the market trades lower, as we get our red BloodHound signal here, as it trades lower, it reevaluates, and it's going to continue to reevaluate on the low. So each time a new low is made, it's going to reevaluate whether or not there is still or is not divergence. That's the way the indicator works. It is really nice when we get the signal right here, and then less than a point later, our BloodHound gives us our sell signal, or we get the signal right there, and we've already gotten our VIX short signal. Really, again, really nice. Again, here's a nice long trade. Would have got you long about a point and a quarter after the low. Another one from here, and then we don't really want to deal with anything into the close. That's basically what the real-time charts look like. Do I have any questions about anything that I've done here? No questions. Oh, I'm sorry. Jeff asks if I use the VXX, and actually, yes, I do. The VXX is the symbol, is the tradable symbol for the VIX, and the VXX is also combined into some of these versions. And basically what I've done is there are two VIX signals that I look at. And one is the VIX itself, and the other is the VIX 9D. And the VIX 9D, the 9D part of it, means that this reflects the options that are expiring in the next 9 days. So as you can see at the close, the value for the 9D was about 3.5 lower than the VIX that is taking in everything. And what I've done is I've created these logic templates that you can test that are both looking at VIX and looking at VIX 9D. And yes, VXX is part of it. Carlo asks, how predictive is the special divergence? Basically, Carlo, something can be special divergent, and just because they're buying them on the way down, doesn't mean that you want to be a buyer on the way down. That's why I want the confirmation that I get from both the VIX and the cumulative delta, which is what a lot of these real-time signals are coming from. So it just because we have the signal doesn't mean I'm automatically trading the signal. What I need to see is I need more. And if we had gotten the signal in here, that's fine, but I don't want to be a buyer anywhere in here, okay? Because it's just not safe. And that's really the most important thing about this is I'm not looking to catch the two things you need to understand is I'm not looking to catch every top and every bottom, first off. And so I want to pick my fights, and picking a fight right there, that would have been a good fight to pick. Picking the fight as this thing falls, not a good fight to pick. He's much bigger than me. So I really want to stay away from that guy. But, shorting that, don't have a problem in either of those. That's why, we want to trade with the big traders and not be trading against them. And, especially here where this is where the Dow broke the news about retroactively applying capital gains taxes. Okay. And what was interesting about that is the options value on Spot Gamma's hero indicator immediately turned and ended up negative for the day. And that you're basically fighting this the whole day when you're fighting what options dealers are hedging. So that's basically what we got. Heinz asks about the indicator settings, and I'm really not I'm not filtering for anything, Heinz. I have the ability, if I want to go back and reconstruct the tape and only look for large lot trades. But my settings on this chart are basically pretty simple. I've got a 35-cent zigzag here, which matches the 3.5 zigzag on the chart. And these are really the main indicator settings here that I look for. Greg asks if I have a live trading room. And the answer is no, I don't. But you, if you're interested, I can bring you to my screens live. And I do this with people in training. And that's basically the time when you understand all of the indicators and you are basically developing a trading plan. So, what does a trading plan look like? A trading plan looks like what your entry is, what your exit is. Entries are fairly easy, okay? Because if I'm looking at this divergence trade right here, or this trend trade right here, it's fairly easy because I know I have the VIX going with me at this point, and I have a pattern, I have divergence, and getting into the trade is very easy. What is hard is getting out, because while we had a perfect setup right here, we had a perfect setup right here. The hard part is you don't have that perfect setup on the opposite side. So developing the exit is actually the harder of the two. And that's why generally what I do is just set a specific point target, because unless I have the spider divergence on the opposite side, like we did here, if we went long from this accumulation, we went short from this distribution, and then we were given our signal right here. If I don't have the opposite signal there, I'm generally going to hold for a specific profit target. The other thing, Greg, about a live trading room is I'm not here every single day, and that kind of has to do with my Airbnb condo that I just mentioned. So I do training live. That's not a problem. I bring you to if you're interested in purchasing, I bring you to my screens live so that you can see, ask questions. I don't have any problem going live. I just don't have a trading room. Sally asks if I use the same settings on the chart every day. And the answer is basically yes. With what I want to do is I want to take into account information that is given to me from Spot Gamma. So one of my other charts is this chart right here, which is a longer time frame chart. And the zigzag on this chart is 7.5. And what I've got on this chart are the Spot Gamma levels. And when price falls below 0 gamma here, there is significant amount more of volatility. And it's kind of interesting how, you know, this morning we traded 2-0 gamma, and then we traded, and they protected 0 gamma and continued to trade higher. So again, I'm going to use the information from spot gamma. And one of the really interesting things is when we get below 0 gamma and what they have as a volatility trigger down here at 41.56, when options trades go off, that is really the time when this template comes into be really valuable, because what the options dealers are doing is they are creating a feedback loop and taking it lower as puts are being bought, because they have to hedge. So what they're doing is once we go below 0 gamma and the volume trigger, we really want to pay attention to the template, because when we start getting those signals, that's when we can see, you know, 8, 10 point, 20 point trades as options dealers are hedging. As price goes lower, they have to hedge even more. Again, this is all spot gamma stuff, but I basically have developed that into my trading plan. When we're trading above 0 gamma, you see the stability, and that's what gives me the confidence of using basically the same 3.5 zigzag and what I do every day. Jeff asks about the data provider, and that's a good question. If you have NinjaTrader Brokerage or basically anybody else, you're going to have Continuum, and Continuum is only going to give you the futures data. So what you're going to need is you're going to need the kinetic. And basically what I've done is I've listed the services right here, and this is under the trading strategy page for VIX BloodHound template. But you are going to need kinetic to pick up the SPY and the VXX. Total, it's about $84. And, you know, again, it's a little bit of money, but it's extremely good information. And I basically describe all of that right here. I have another page under the trading strategy under real-time VIX templates. And this is where I'm telling you what each template is doing. So there's a lot of information here that you can get from the strategy page. So Jeff, Kinetic is my data provider. Dean asks, so to operate your system, you would want to have your software, yeah. NinjaTrader, yeah. Spot Gamma, yeah. And Shark indicators, yeah. Those are basically, I don't need any, anything else. The book map that you saw is something that I bought back in 2016 before I had any of my, before I had order flow, before I had any of this divergence indicator, before I did any of the volume analysis. So it's something that I purchased that I had a lifetime license to before any of this new stuff was created. So, is bookmap needed? No. But Dean's question, I would want and I pay for spot gamma, and I would want and need Shark Indicator's BloodHound to be able to read all these signals. Because what you're trying to do, Dean, is you're trying to come and take, all of these charts and make a decision on which way it's going. There's sometimes 5 or 6 different charts that BloodHound is looking at and making a decision whether or not we're going long or going short. And that's a lot of information that BloodHound does the crunching of the numbers for. Now, like I said, what I also do is I also have the VIX chart up, and I'm looking at this VIX chart, and that is helping me also, but it's not the only thing that that's there. But I definitely want to look at these VIX charts, but I know if I'm getting this green indication from BloodHound, I know what it's telling me. So yeah, and spot gamma itself is very inexpensive for their basic package, which puts this on the chart right here. And if you haven't bought NinjaTrader, you can basically run all of my indicators with the exception of the order flow indicator. So the spot gamma indicator, the divergence indicator, and the volume analysis, all that stuff will run on the free version of NinjaTrader. It's just when you go to the volumetric charts, which is the order flow chart right here, that's where you need to actually pay NinjaTrader. And there's a few things that are really interesting. I didn't really touch. I didn't even. This is the first I'm basically showing it to you. What is really interesting about the order flow is this. My 2 strongest signals that I have are the ZTP order flow, which is here and here. And what is interesting is that we normally find those on a low and on a high. Now, one of the things that I will tell you if you talk to me on the phone is I don't rely on the order flow anymore. I rely on the divergences and the volume analysis to make my trades, because in order to get this order flow signal right here, I've had to have waited 2 points before the bar closed. And normally I can get in at a much better place right here. Now, I still have the chart, I still use the chart. And if I've entered a trade from here, or I've entered a trade from up here, I will get a audible alert, which basically is the confirmation, that just additional confirmation. The other thing that is really neat about the order flow chart is what I call my extension zones. And what is the neat part about these is here we see buyers were in control in this bar, and sellers were here, buyers were here, and then the sellers took control here and sold it off. What is really interesting is that 1 tick from a high, 1 tick from a low, well, the sellers to this point, until it reached the high of 4207 right here, the sellers were basically passive and accepting limit, and they were passively selling on limit orders. But in order to change the actual direction of price, what they do is they take over with market orders. And that's why about 70% of the time, one tick from a high, one tick from the low, we see that. We see it again happening right here on this low, and then right here on this high. The second strongest, or the most, the signal I consider my strongest is this point and control extension, because we had a point and control fight up here high in the bar. We then saw one tick from the high being made with the extension zone. And, that drops us down another 8 points. So, there is a good use for the order flow, but I don't, 100% depend on it. This Atom asset, the signals are the red and green arrows. Well, the signals are showing you where there is a divergence. Okay. So for this is regular divergence right here. So right here on the chart, this is where it's going to analyze and look at where we have, if we have a divergence. And as I explained, if price does trade higher, then it's going to reevaluate, and it's going to reevaluate the signal. If it's still divergent, then the signal's going to remain. Now, these numbers up here, this is what tells me how divergent it was. It was divergent by 294 contracts. That's this value that I call KP3 right here. This value right here of 112 at this distribution, that's very high, along with this 106 from back here. That's very high relative to the other numbers. And when you see these high numbers and it's combined with a distribution divergence signal, that is just something we want to see. And basically, the distribution divergence is based on every trade market and limit from this high right here to the low back to this high right here. But this 112, that is the limit order resistance that's occurring from the low to the high right here. And we could see that as price went higher up here, they backed off of wanting to be sellers by 50%, because it went from 112 down to 63. And so why is that? Well, the VIX is telling us price is going higher. These people understand that. They didn't want to get short. But the volume analysis part is just so important to figuring out the quality of a trade. Again, I used to consider a number over 95 to be accumulation or distribution, and that was before COVID. The numbers have gone down a lot since COVID, but like where we see down here, 142, and there's our low, and we've got a bloodhound buy signal. I'm confident in that 142 that price is going to go higher, just like I would be confident in taking a trade right there with the distribution divergence and the high value in the KP2 ratio. Adam, I can't bring up NQ today because I just don't have the chart ready. And but if you wanted to give me a call, I can definitely show you NQ. So that's not a problem. The training, Dean asked if the training is one-on-one, unless there's a group of people that are a couple traders together. That's happened in the past, but basically it's one-on-one. After you purchase the software, I install it for you. I get it all set up, and then I start giving you homework. I have a getting started page on the website right here, where I want to get you to start understanding some patterns. I want to get you to understanding how you set up the indicators. I want to get you to understand how you set up BloodHound and the VIX. And I want you to understand some things about order flow. But I take you through this process. It's one-on-one, and I am in the Eastern time zone. So basically, if somebody calls me and says, or sends me a Skype, says, "Are you available at 3 o'clock today?" Is so long as I don't have my Airbnb check-in or checkout duties to do, I will be available. So that's basically how it works. I have people that are exactly 12 hours on the opposite side of the world. So when I'm waking up at 8 a.m. Eastern, 7:30 Eastern, it's 7:30 their time, we do training like that. So it's basically when you're available, I try to make myself available, and I'm available about 95% of the time. And Sally asks if it's are both necessary for the SPY and the VIX work. Sally, I get the best signals from the SPY chart itself. So my answer would be, yeah. When I discovered this, which was about a year ago now, I wanted to see my divergence indicator, and I wanted to see what the ratios were for accumulation and distribution. And so I brought up the SPY, and I put the divergence indicator on there, and I just was amazed by the amount of divergence trades there were and how accurate they were. So I spent basically the next couple of weeks without doing anything, without telling anybody what I was doing, understanding this. And you just, as you can see, there's significantly more tradable signals when using the SPY than if I was using the ES chart here. The ES chart, that was a tradable signal as far as divergence goes. That was a very tradable signal right there, 10 minutes into the close with the VIX green. But from this chart, I would have only been interested in 2 trades. With the spider chart, I would have been interested in a lot more. Not a problem, Dean. Dean wanted to just to make sure of not a problem. I get it. I understand. And basically, I put all of this on my web pages so that you're understanding what you're getting into. I've never had somebody tell me, they didn't find value in using the SPY with the VIX and paying $84 for Kinetic. It to me is just kind of a no-brainer. And there will be a link sent out, Greg. And Dean asked that, or Dean says that the website appears to contain a lot of data and information, including a manual. Yes. Basically, what I tried to do is when I learn something, I put it in a video. I put it on the blog, my blog right here. And, these are the videos as basically I learned something, I try to put everything here, and there is a sign up for blog notifications that you can do right here. And I also have a YouTube channel that you can get all that stuff from. I do have a contact page here. It's easiest to contact me either through the form here, or just search ZoneTraderPro on Skype, or call me, either way. But with Skype is usually the easiest because I can immediately bring you to my screens and screen share with you through the Skype. The manual, basically what I'm trying to do is I'm trying to, both in a video format, I have a video library here where I've gone and I've broken down, how you set up the indicators, how you look at the patterns, the video, a section just on spider divergence, a section just on BloodHound, section just on order flow. And basically, as I develop new information, I'll put it here also. But there is, I'm always here to answer any question if the video doesn't make something clear. And Glenn asks, Glenn asks, so you make your trades on the ES, but follow the signals on the SPY. Exactly. And like I said, what I'm doing is I have the two charts side by side. Okay. I have this chart side by side with this chart. So if I'm picking up a divergence signal here that the SPY isn't picking up, then fine. I could put everything on one screen and understand everything. Now on this chart, I do display more information. One of the things that I display is this KP2 ratio, basically tick by tick. And that is part of the volume analysis also. What is just really interesting is, unfortunately, I turned it off for the presentation, but let's see if this can fill fairly quickly. One of the interesting things about this KP2 ratio is you can see limit order support either developing or going away. And when I mean support, I also mean resistance. And that is the huge advantage to this ratio. And basically my last video that's what that was about on the blog here, going over what the KP2 ratio is telling us. And let me try to fast forward this because it would be a little bit quicker. Here is the ratio. Here's the ratio on the SPY. Now, what is just so interesting, and the point of this video, is you can see that as we go from, as the indicator is just building as price is going higher, higher, higher. Well, that's a tremendous signal, because what this is telling us is that when price was here, where the crosshair is at right now, they were putting out limit orders at a rate of about 1,500 shares per penny. And by the time we got all the way to here, Remember, the indicator is reading all the way up and is reading resistance all the way up until the time the indicator flips right here. They had increased their resistance to about 5,500 shares per penny. And that's divided out over this entire move from there to there. And again, you're getting this information in real time. And if this was a live chart, we would have these numbers, the static number at the high, but as price traded off, you'll have the live numbers being displayed right here. So, you know, there really is a lot to this volume analysis, and it's just so interesting. You know, you could see all these spider divergence trades, and you know, the KP2 ratio is just increasing until we get to our apex, until we get to our VIX sell signals, and you know, then we nail it. You know, 12-point trade from here, 15-point trade from here. Yeah, let's see if we can pull this further. And let's see. And that was well, probably at least another 10 points. You can see how far down the green line is going. And the point of the video is, you know, just the KP2 ratio on the SPY itself. We get the same thing. We do get the same thing on the ES. Which is right here. And I'm seeing this in real time, just like you are. You can see as price went lower, the ratio got lower. And what that is limit order support. Now, as far as a pattern goes, this is my exhaustion trading pattern, which is a trend reversal pattern. Again, we look at the ratio and we see we have a 155 right here. We got a 169 right there. And that was basically, you know, the market came back and tested it twice, but that ended up holding. And you know, we got paid if we followed our trading plan and took our trades appropriately. So I hope that answered your question, Glenn. Any other questions on anything that I've shown here? I'm not seeing anything, Keith. Am I missing anything from the chat? I don't think so. Dean wants to know where I was a police officer at. I was a deputy sheriff in Los Angeles for 17 years. I got hurt in a couple of accidents, and that's what took me to my day trading career back in 2002, 2003. So basically, I've been retired now for about 18 years. And I don't have anything else on my screen, Keith.
Okay, very good. Yeah, I don't see any other questions. yeah, you always, whenever I see the attendees list, people stick around to hear what you have to say. So that's always a really, really good sign that people appreciate what you have to offer. So that's great. Well, thanks a lot, guys. Appreciate you being active, and thanks to Chris for sharing more of his insights as always. Obviously, if you would like to learn more about what Chris is up to and what he's offering, you can go to his website. Chris, if you want, if it's convenient for you, you could paste in the link to your website in chat.
Sure.
The recording for this will be going out. If you're registered for this, you should get it automatically tomorrow. You might find it as early as tonight on our YouTube channel. That's youtube.com/shark indicators. All right. And that link went out to just panelists. So I'll paste that back in so the rest of you can see it. So it looks like ZoneTraderPro.com. Yeah, learn more about it. And obviously we're here to support BloodHound, and Chris is here to enhance it even further if you like what he's up to. So Chris, do you have anything else? Otherwise, we'll move on with our day.
No, I'm good.
All right. Well, thanks a lot, guys. Stay in touch, and until next time, have a good day.
Thank you, Keith. Thanks, everybody. Bye.